particular video, we're going to go ahead and talk about how and why the typical investor should be investing in mutual funds. First off, we'll give a brief explanation as to what a mutual fund is. A mutual fund is going to be a pooled investment. When I say pooled investment, let's say you're investor A, and we have 30 additional investors. That group of investors will all put their money into a pool. That pool is going to be managed by a group of people or a fund manager, and that fund manager is going to go out and they're going to invest in bonds, they're going to invest in stocks, they're going to invest in different products. So you're getting the benefit of being in that pool of investment, and you're going to have a certain vested interest in that particular pool. Some of the benefits that that is going to offer you is it's going to offer you diversification. So, for example, let's say you wanted to go out and you wanted to buy 100 shares of stock in Apple, and Apple was trading at $100 a share. That's going to cost you $10,000. That can be a lot for somebody who doesn't have that much capital. Now, in addition to Apple, let's say that something happens and the tech industry goes down. If you're completely invested in Apple, that's going to be a huge hit against you. But let's say that you have diversification. Instead of having all of your money in Apple, you have some of your money in Apple. You have some of your money in Rite Aid, which is in the retail healthcare industry. Let's say that you have some of your money in, let's say, U.S. Steel manufacturing. Let's say that you have some of your money in Delta Airlines, the airline industry. So if something happens in the tech industry, because you're diversified and your money's spread out, you're not going to take as much of a hit, which can be expensive. You'd have to go in and buy the 100 shares of Delta, the 100 shares of U.S. Steel, the 100 shares of Apple. That can be pricey. I mean, you could be talking thousands and thousands of dollars to buy 100 shares at a time. With that mutual fund, a lot of times the investment minimum may only be $100 or $1,000. There may not be any sort of commissions or fees. So you're getting the benefit of investing without commissions or fees, and you're getting the benefit of discounted diversification. That's the best way to put it. So let's take a look at here at E-Trade is where I do my mutual fund trading. They have a very good tool that lets you screen for mutual funds. So the first one, we'll go ahead and we'll take a look at the research tab, and then we're going to come down to products, and then we're going to go ahead and click on mutual funds. This is going to be your mutual fund screener. So let's say, for example, we wanted to go ahead and look at all fund families. A fund family is going to be essentially like a brand, Fidelity, your Vanguard. They all have different funds. A lot of them have comparable funds, but some people prefer different fund families, and not every single fund family is going to be available here at E-Trade, but E-Trade is going to offer a lot of different funds. They actually offer over 1,300 no-load, no-transaction fee funds. For beginning new investors, I like to gear them towards your no-load, no-transaction fee funds, because those are going to have the pretty much no expenses up front. Now, one of the caveats to that is when you buy a no-load, no-transaction fee fund, you have to hold it for 90 days or longer. If you don't hold it for 90 days or longer, you're going to face the early redemption fee at E-Trade, which is $49.99. So if you do go in and you buy a no-load, no-transaction fee fund, hold it less than 90 days, decide to liquidate, then you're looking at $49.99. Whereas if you hold it longer than that 90-day period and you decide to liquidate, then you're not going to pay anything. So let's actually come down here. And we'll come over to All-Star Funds. We have Fund Strategies. We have Sector Funds, International Funds, Money Market Funds, and Quick Search. So what we'll do is we'll go ahead and we'll start with the Quick Search. what we're going to do is we're going to look at all fund families. We're going to look at all groups. We're going to look at all categories. Actually, let's do this. Let's go ahead and let's look at balanced funds. We'll leave performance alone. We'll leave Morningstar ratings alone. And what we're going to do is we're going to go ahead and look for no load and no transaction fee. So we'll go ahead and view 75 matches that correspond with our search criteria. All right, here are some of the funds. The first one is going to be your Alliance Income and Growth. Let's go ahead and pull up the Alliance Income and Growth and take a look at that. Now, this Alliance Income and Growth, Alliance is going to be your fund family. The Income and Growth is going to be the name of the fund, Alliance Income and Growth D. So let's do this. The net asset value, as of right now, last net asset value was $12.60. That's up 5 cents versus the previous close. Now, one key thing you want to be aware of with mutual funds is they price once per day. So how stocks may trade millions of times in a day, a mutual fund is only going to trade one time per day. And that usually occurs at the fund cutoff time of about 4 p.m. Eastern time. All right, let's come down here. Now, one thing you want to be cognizant of with this particular fund, the initial investment is $1,000. So although there's a no load and no transaction fee, in order for you to get involved in this particular fund, it's $1,000 up front. Now, after you cover that initial investment, the subsequent or additional investments are only going to be $50. So let's say, for example, you get your tax money back and you have $1,000 lying around and you need something to do with it. You don't want to put it in a savings account and leave it sitting around. You can take that $1,000 and you can put it in this particular fund and you'll go in and you'll buy as many shares as you can buy with your $1,000. And then let's say every 2 weeks you decide that you want to add $50 to this particular fund. From there, you can go in. You can add $50 to your E-Trade account, and you can set that up via quick transfer, which is a way to get funds into your E-Trade account for free. And then every 2 weeks, you can go in and you can buy additional shares of this particular mutual fund for free. Now, if you want to go in and we want to take a look at some of the details of this particular fund, you can look at the fund report, you can look at the prospectus, and the prospectus is going to be the most detailed report as far as information goes in this particular fund. The fund report is going to be generated by a third party, and it's just going to be kind of like a detailed analysis of this particular fund. So let's go ahead and look at the fund report just because it is a little quicker to examine. And I don't want to go too in-depth on this video. This video is going to be more of an introduction to mutual funds, why they're a good tool, and some of the advantages that they're going to offer you. So we'll take a look here, and we want to take a look at some of the holdings in this particular mutual fund. So what we'll do, we'll come down, and we're going to take a look at the top 10 holdings. Now, the biggest holding of this particular mutual fund, stocks-wise, is going to be Apple Inc. Apple Inc. represents 1.1% of the typical holdings on this particular mutual fund. Next one is going to be Microsoft, 1%. Next one is going to be Kroger, 1%. And as you can see, there's some diversification here. We have Kroger, we have Apple. They also have Home Depot, which represents 0.9%. So it's a pretty wide array. Walt Disney, Ford Motor Company, Intel Corp. So it lets you know that, okay, let's say that something happens in the retail home building industry. We know that, okay, we have some investments in the tech industry, or we have some investments in and healthcare with McKesson and so on and so forth. Let's see here. So you do want to be aware, it looks like this particular fund has over 65 total holdings. So a lot of different companies that it's invested in. Let's see here. Now some other things we want to look at. Let's go ahead and take a quick look here. Now it also has some investments in bonds as well. Bonds are going to be your debt securities. Typically, they're going to be less risky than stocks, but they typically don't have the potential to return as much. So they do have some exposure to fixed income as well. Let's go ahead and close out of this and come back. And let's go ahead and take a look at the performance of this particular mutual fund. So let's go ahead and pull up a chart on it. And let's do this. Let's go ahead and look at the chart over, say, 10 years. So it looks like this one has kind of pulled back a little bit versus where it's been. So if you see here, looks like it was up above 15 per share. It's moved down a little bit. Let's take a look at another fund here. Let's take a look at Dodge and Cox Income Fund. And we're looking at this one over 10 years. This is a good fund as well. As you'll see, over time it has gained, especially over the past 5 years here. It's been showing a pretty decent increase. All right. Now, as you'll see, this one has an initial investment of $2,500. A little more steep for this particular fund. It also has a transaction fee as well. The standard transaction fee at E-Trade is $19.99. That's going to be in addition to any other fees that the fund may impose as well. In order to see what fees the fund is going to impose, you're going to have to consult the prospectus, which you can pull up from each fund on this website. And that pretty much covers it. I just wanted to go in some of the basics of investing in mutual funds. If you have any questions, don't hesitate to reach out, and I'll elaborate on future videos for people that want to go a little bit more in-depth on some of the terminology and what you can expect when investing in mutual funds. But this is just a brief synopsis. You guys have a great day.